G'day everyone, and welcome to an episode of the chat about the ATO Debt Series. We're here with Jeremy Harris today from Grow CFO. He is the founder and co-director. Jeremy, it's interesting to explain what you do, so I'd love if you wouldn't mind just introducing yourself and tell us a bit about Grow CFO.
Thanks, Liam. Thanks for having me here today. Great to be here. At Grow CFO, we are virtual or fractional CFOs. The idea is that we work with businesses that are not large enough to have a full-time in-house CFO or senior finance person, CFO being Chief Financial Officer. So they're not big enough for someone full-time in that role, but they still need that guidance and that understanding of where their business is at and where it's heading. The type of accounting that we do, because we're accountants, the type of accounting we do is about where are we now and what does the future look like. And alongside that, we have a team of bookkeepers as well, because our CFOs can't do what they do with dashboards and analysis and forecasting if the data isn't right.
Got you. And you work across a lot of different industries in Australia, SMEs and...
Yeah.
Yep.
In terms of the size of businesses we work with, it is generally, usually from $1 million upwards in turnover. We don't always measure our ideal client by turnover. Sometimes it's around complexity of the business structure. But generally from $1 million up to now about 40 million in turnover.
Okay, yeah. And what are you seeing from a cash flow perspective with some of those businesses from small revenue to larger revenue?
Really mixed experiences or mixed results at the moment. Across different businesses, and sometimes businesses in the same industry having very different results. It often comes down to finding a particular niche or a discipline, being really disciplined in business. Some businesses are just really smashing it out of the park and doing fantastically well in revenue and in profit and cash flow, which is an important distinction. And I'll just throw in here, we often say revenue is vanity, profit is sanity, cash flow is reality. And the key thing we're talking about here today is cash flow. That's the reality. There's no point in having a massive revenue if you're not actually making a profit, and then if you're not turning that profit into cash flow. So yeah, a lot of variety of results that are out there at the moment. Some businesses doing it really tough. Sometimes it's about going upstream and really identifying what is the challenge behind that. Is it a marketing problem? Is it a people problem? Is it a niche problem? And then others just get the formula right, and then they do the same thing again and again. Another saying that we have is boring is profitable and profitable is fun. So if you get the formula right, even though you might be tempted to try the next thing, if it's working, just wash, rinse and repeat.
Yep. Simple. Yeah, it is interesting, especially when it comes to lending, the cash flow lending. People saying, they have made a profit, but that doesn't, that's not shown in their bank account. So they're lending against that net profit, but because they don't have the cash in the bank account. So it's quite interesting how that happens. But what do you think there's an impact that the ATO is having on cash flow right now? Because it seems like there's a lot of ATO debt out there at the moment.
There is, yeah. Well, there's some statistics around just a huge amount of total ATO debt. Amongst the businesses we work with, both in terms of our CFO work and bookkeeping, there's a large number that have some level of ATO debt and some form of payment plan in place. And we see sometimes unpredictable approaches from the ATO. It can depend. Yeah. There's a bit of a thought that is real, that it can depend on who you get on the phone when you call the ATO, if you're negotiating about a payment plan or negotiating about debt. There is a lot there, but it's still very much the case of just being proactive and being in communication with the ATO is the best way. Generally, it's easy to get a payment plan in place if previous track record is good, if the amount is not too large, like let's say under 100K is not too hard to get a payment plan in place, and under 12 months, there's usually no questions asked or very few questions asked in those sort of circumstances. So best just to do that, but then get the cash flow right going forward, because with an ATO payment plan, the pressure comes with the next month or the next quarter, where there's BAS, there's super, those things need to be kept up to date. Otherwise, the payment plan just becomes a noose around the neck.
Yeah. Yeah, those ATO payment plans, they're becoming quite sharp. You know, the rate's quite high, and the repayment terms are actually not favourable, really. So that's what we're seeing now. We're getting other people, business owners, into, you know, bank debt or you know, second tier lenders at, you know, sort of lower rates or similar rates to the ATO, but the payment plan's over 5 or 10 years, so or the repayment terms rather. So it's halving their repayment, or even just taking it to a quarter of that amount. And I'm seeing that's taking the pressure off a lot of business owners now.
Absolutely. There's a lot of good reasons for that. So I said that it's not too difficult to get a payment plan with the ATO under 12 months, but that can make cash flow really tight.
Yeah.
So definitely getting a longer term, a lower rate. And if it's done right, then the other differentiator now is that with external debt, refinancing ATO, that's probably going to be tax deductible interest, whereas now the ATO interest is not tax deductible. So that can be a significant difference as well.
And not just their cash flow impact, but it seems it's having a larger impact on business owners' ability to run their business, and maybe from a mental capacity or, you know.
Yeah, I agree with that. That's a lot of what we see is that it's like it's a real bogey on the back, is the idea of having ATO debt, especially if someone hasn't been proactive to do something about it. They're kind of waking up every day thinking, when am I going to get the phone call, or when am I going to get the letter in the mail, or worst case scenario, a thing called a director penalty notice, where they're actually going to come down hard and take action. To just have that constantly in the mind is a real distraction, definitely, from business. And we're going into a phase, I think, over the next few years where it requires a lot of discipline in business. Focus on profit, focus on cash flow. Don't need distractions like that. Much better just to get it sorted, get finance in place, and follow that plan.
Yeah, discipline's such a big thing, especially with overdrafts or business loans where there's cash available, but you know, there's, you know, not put in the right place. But that probably leads into your strategic spending plans, or you know, tips to better manage cash flow. Is that you know, so your strategic spending plan is something CFO, Grow CFO works towards?
Yeah, and when we say strategic spending plan, that's our word or our phrase basically for a budget, for having a budget and having a plan. And budgets, like, I think, even as an accountant, I think budgets can kind of be a bit boring, but it depends on how we frame it. The budget really is, what are our goals for the next 12 months, 2 years, 5 years? And the shorter the time frame, the more we're fine-tuning it and going into more detail. And bringing it back even further, a really important part of that kind of planning is having what we call a 13-week rolling cash flow forecast. So that is just looking out over the next 3 months and saying, what are the ups and downs in cash flow? Can be done as simple as being on a spreadsheet, or there are applications that tie into accounting software that make it really easy to do that. And then you can see those big dips in cash flow at BAS time, at super time. Super, by the way, a lot of us know that next year it's going to be payable on payday. So better to get into a more regular rhythm now instead of every quarter. I think every month now at least. But with that cash flow forecast, you can see where those peaks and troughs are. You can see several weeks out, what do we need to do to get our customers to pay, to collect those receivables, or to sell more, or to go and get some finance. The sooner we see that in that cash flow forecast, the better that we can manage. So that's over that 3-month period, but going out to say 12 months, what are our goals for the next 12 months or for this financial year? What's our top line revenue goal in particular? And then what are all the activities that we need to do to make that happen? Sometimes I think with cash flow challenges, what we've actually got to do is go upstream, if I use that word again, to see what is the actual challenge behind cash flow. Is it not meeting sales targets, which is then looking at what are all of the activities that need to happen to achieve sales? Or is it that personal spending is too high, so it's causing a drain on the business? Or is it that every time cash comes in, that we think, oh great, let's put on another person, or let's buy another piece of equipment? Having that strategic spending plan just keeps the discipline around achieving those goals.
Yeah, it's funny because everyone's heard of a forecast, a cash flow forecast, but whatever you're doing is something correct. The amount of times I'm working with some of your customers who are frantic and stressed at the start, and after weeks and weeks and weeks, and we get things in place, it seems they're re-energized and they're excited about their business again. So it's funny that just looking at things differently to a cash flow forecast, to a strategic spending plan. There's something there's some magic in that. So yeah, it's a real credit to you guys and what you're doing there. So
and when that's in place, as you said, it makes the lending process so much easier and quicker when the lender can see that there is a plan in place, and it just helps them to crunch their numbers and to tick their boxes.
Yeah, that's good. Yeah, mate, that's incredible insight today. I really appreciate it. I know you're always up for a chat. So, is there anything can they reach out and have a chat to you if they got some sticky points or cash flow conundrums? Or
Yeah, absolutely. Yeah. We love talking business, and we love helping to solve those sort of challenges as well. So our website is growcfoco.com. growcfoco.com, and then it's Jeremy at that website address for my email.
Lovely, awesome. Yeah, well, thank you again, mate. Really appreciate your time and the knowledge and experience you've just delivered today. It's really, really grateful for it, mate. So thank you.
Pleasure.